Hi everyone, good morning and welcome to today's morning report on Wednesday the 3rd of December with me, Rich Perry, market analyst at Handtech Markets. The European trading session has started off fairly mixed, and that's sort of come about with the data that we've had out this morning already, but the futures were certainly pointing towards a fairly positive open, following on from the Wall Street gains that we saw yesterday. The S&P 500 up 0.6%, and also the Asian markets also slightly positive with the Nikkei slightly higher. That was helped by the Chinese non-manufacturing PMI that came out at 53.9, which was a slight improvement on last month, 53.8. But since then we've had the Eurozone services PMIs come out, and they've pretty much been fairly, mixed, I suppose, but then with a slight bearish sort of disappointment. Certainly Spain was a big miss. Italy slightly beat. France missed again. France continues to fall into contraction and worsening as well on the PMIs, so that's certainly a concern. And also Germany was in line with expectations. However, the German services PMI dropped back to 52.1, and also the composite as well to 51.7, so only mild element of growth there in the PMI. The Eurozone data as well, 51.1, so very, very sort of nondescript in terms of growth, very neutral, nothing really showing through, so that's not going to bode too well for GDP. No real growth to drag them out of this disinflationary situation that the Eurozone finds itself in. That sort of takes us to the what we have ahead of us today, which is a considerable amount actually. Just for a start, the forex markets have actually now broken out. There's been a significant upside break on the dollar today. Euro being dragged to a 2-year low. Euro down at 23.40 at the moment, which is below the 23.57 key level. Looking at this dollar index chart, it's above 88.70, which if I drag it all the way back to 2010, you'll see that is a key level. That was the 2010 high, and it's now above that. So it's we're breaking higher from this slight uptrend channel here, and that certainly bodes well for the dollar going forward this week. We've got the UK services PMI coming out on 9:30. That's expected to just improve slightly to 56.5, but certainly it remains reasonably positive, you'd argue, on the services sector, and it's sort of supportive of the current levels of growth that the UK is seeing. With around 75% of the UK economy being service sector based. Then into the afternoon, we've got the ADP employment number, 221 is the expectation there, so just slightly down from last month, and sort of, you'd argue, middle way between the sort of levels that we've seen over the last few years. So it remains fairly positive on that ADP number. ADP has been a reasonable gauge for non-farm payrolls in recent months, and certainly if it came out at 221, that would be that would give a positive indication that payrolls would be continuing on from there, holding above 200,000, which has been pretty much since January this year, so that'll be a good indication for the dollar as well. Into the afternoon as well, we've got the manufacturing PMI for the States, the ISM data. 57.5 is the expectation there, and again a slight increase as the PMI just slightly expected to snap a little bit of a decline it's seen in recent months, but certainly that would again be a decent number for the dollar. Okay, so lots to get through, as I said, this today, lots to move these markets around. My chart of the day is silver, and the silver chart has had this strong run higher that the that the gold chart has also seen, had that strong rebound on Monday. But it's back to this downtrend, and nothing really has changed yet on this chart. The outlook remains fairly negative, and I think it will stay that way until we see a move above that key reaction high at 1671. It's not a million miles away from doing that now. It's only just over 1% away from there, but still, you'd argue that this big downtrend is intact, and the momentum indicators are just still effectively just unwinding this sold position on the RSI and also on the MACD lines. But if that rebound just can continue, because obviously we had this doji candlestick yesterday, which denotes uncertainty with that rebound, I think that would say. Although today's reaction has been fairly positive, I'm still a little bit wary, certainly will be, until we break back above, I think, Monday's high, 1676. So there is that resistance, you would say, around that 1675 to 1675 sort of area. So until we break that level, I think the outlook for the silver chart will continue to be just one of selling into strength. The momentum on the daily chart has just slightly picked up in the last couple of hours as this rebound has sort of taken off in European trading. But it'll be, as I said, it'll be interesting to see if it can hold above. If I zoom in here, you'd probably want it to need it to hold above that 1653 mark initially. It's had a slight poke above there but drifted back inside, so 1653 may start to think about that 1676 high, but that level needs to be breached, I think, for this to start to have a serious think about turning around in terms of the outlook. Okay, so I wish you good luck in your trading on silver today. And there's a lot to move these markets, so a lot of volatility potentially into the afternoon with all the US data, and I will speak to you later. Thank you.